Hi everyone. Yesterday we had stopped near the financial position. How to understand the financial position? We spoke about two concepts that one is asset and one more is liability. What is this asset and what is this liability? First of all, these assets are those which will be used in the business for further production purpose or making it sale, which is used in the business and which will generate cash flow. Once you produce good, you tend to sold, so it will be there will be generation of cash flow. All this will be measured in terms of money. This is asset. Asset is nothing but which is used in the business to generate cash and and it is measured in terms of money. What is this liability? Liability is an obligation for the company to pay. Suppose, example here, you would have purchased goods, so you have to make a payment, that is compulsory payment, because you would have purchased raw material for the purpose of making it production. So making payment to this is an obligation. So there it becomes a liability. Here, example. Suppose I have bought the machinery which will help in sewing the clothes. This is also an asset, sewing clothes, where that it will be a raw material or the machinery. The clothes will be the ultimate good that will be helped by the business to make money. But what is this machinery? Machinery is the which is used in the business to make this cloth. So machinery is an asset which is used in business to generate cash flow and it is measured in terms of money. All this criteria has to be fulfilled for considering it to be an asset. Now let's see in this asset how many classifications are there. In these assets we have non-current and current. Now in non-current are those which is more than 12 months, which can be utilized in the business for generation of cash flow for more than 12 months. Example, this machinery. Here, with the same example, this clothes, you keep sewing it, you keep stitching it, or you keep selling it. So, which is less than 12 months. So, these cloths will be considered as current assets. When you're making it sale, then we consider that when you're making it sale and get generating cash, then it will be considered as sales. Now, in this non-current assets itself, there is again a subclassification. Let me put it in a flow chart of this non-current asset. You guys know what is now non-current assets. So let me have the clear flow chart for this non-current assets. Non-current assets, here you will have three. Under this you will have three. One, you will have fixed asset. One more is non-current investment. And long-term loans and advances. We will discuss each and every one now. Fixed asset. Fixed asset is it cannot move. Under this again we can see two criteria. But here under this we have something called tangible assets. Here example will be building. Fixed asset. Or it can be land or machinery that is fixed. Examples. Tangible. Tangible assets are those which can be seen, which can be touched, and which can be felt by the business. Next is intangible goods. Intangible goods are which you can't see, which you can't touch, or you can't feel. Which are those examples? Here, all this will become examples of this. But intangible assets ka examples will be goodwill. But what is this goodwill? Goodwill is name or fame of the business that is earned over the period of time. Example, Infosys, name and fame of the business. Next, tangible asset, intangible asset comes under fixed asset. Next, we have capital work in progress. What is capital work in progress? Now, suppose you are in a building where you have taken for the rent for running the business, and now you are planning to purchase or construct the building for your own business. Then the construction progress over at least 1 to 2 years it will take. So whatever amount is invested in building that building, it will be sitting under capital work in progress. Once it is completely complete, where the business can take place or run its business, then it will be classified as building. Next is your intangible assets under development. For tangible, it is capital work in progress. For intangible, which is in still process, it is intangible under development. Suppose a business is involved in creating one software which will take over certain period of time. So that will be an intangible assets. Software. Example, building of software. Now, non-current investment. All these are fixed asset. Under non-current investment, investment itself tells where you have invested the money outside the business. Either you would have invested in mutual funds or in equity share capital or in the form of deposits. Let us see each and everything. Mutual funds is where you put in your money to earn either for the increase in price, and you will receive amount of dividend from that. You will just increase for the prices to be increased. And here, what are these mutual fund? Mutual fund is group of companies where the amount will be invested through agency. Equity share capital. Equity share capital, or it might be only a share capital also. Either you will invest it in your related parties. Now, what is related parties? Related party is your subsidiary, the holding company. This is the main company, and it has 1, 2, 3 subsidiary companies. Suppose example, you have Tata's here. The subsidiaries here under Tata's or different business will be Tata Steel, Tata Consumers, Teleservices. This is the main company. Under this, these are the subsidiaries. Under this, again, there will be some step subsidiaries. You will invest in them, the related parties. Now, the step 1, step 2, step 3 are your related parties. And either you would have invested outside the business, which might be in public companies through the demat accounts. Next, you have deposits. You would have invested in fixed deposits. Now, here you would have got down what is dividend. For the shares that you have invested in that company, they would have earned a profit. For the profit that is earned, that is distributed to shareholders. Shareholders are nothing but we who have purchased the shares. So for that, they tend to give us dividend from the profit earned during the year. This is all about your non-current investment. Now, long-term loans and advances. To this related party, you might give an advance for particular activity to be performed, or you might give an advance to the outsider party for taking particular service to in the future period. Those are your long term advances. This is all about your non current assets. Next we shall see the current assets. Current asset is less than 12 months, which is utilized or which shall be received, utilized or received within 12 months. Now, under this current assets, we have again the current investment. We have learned the non-current investment. It is current investment, which will be less than 12 months. Again, you can invest it either in the FD, which will be for less than 6 months or 3 months, or it might be in the form of mutual funds, which you will again invest as soon as the and you will sell it as soon as when the price is raised, or it these are deposits, these are mutual funds, or you might start selling the shares that is held in the demat account in the other public companies. All these are current investments. Next, you have trade receivables. Trade receivables, or it is also known as debtors. Trade receivables or debtors is where you have to receive money. Why will you receive money? For the sales that is done in the business. Suppose the sales has to be on credit basis. Credit basis is payment that will be made later. You will not pay in cash. You will tell I will pay after 30 days, or it might be 60 days. Then the money which I will receive after 60 days, you will be classifying it under trade receivables or debtors. Next, you have cash or cash equivalents. Cash is okay. The hard cash that is kept in the business for day-to-day activities. What are these cash equivalents? Those will be bank balance that the company has in all the accounts that is maintained in the business name, and it might also have marketable securities. Marketable securities are selling of the shares without incurring any losses. Those are marketable securities. This comes under cash and cash equivalents. One more classification under this will be short term loans and advances. This you have made sales and you would have given on credit. Here, short term loans and advances, you would have given advance to the vendor. Example, advance given to vendor for certain product or service that I will receive in future. Future, but which is less than 12 months. This will be short-term loans and advances. These are all about your current assets. Now, complete asset of non-current asset and current assets are done. Next, we are left out with the finding out the financial positions are non-current liabilities. Under liability, again we have non-current liability and current liability, which will be paid after 12 months, which should be paid within 12 months. Liability is something you have to pay. It is an obligation for the company to pay, which will be paid after 12 months. Here, first classification will be long-term borrowings. Here it will be short-term borrowings. Now, long-term borrowings, either it might be from bank or any financial institution, or you might issue an item known as debentures. Debentures are the again creditors of the company or lenders who will lend money to the business for which they will get interest. It is an agreement between the company and the debenture holders where the business debenture holders tend to give money for in return every month or quarterly or yearly or half yearly the interest shall be made. Short-term borrowings. Short-term borrowings will be in the form of bank overdraft facility or cash credit facility, or you might have taken loan from any financial institution for specific need purpose for running day to day business and which will be paid within 12 months. That will be classified under current liability. Next, under current under non current liability, it is only borrowings and provisions. Provisions are future liability that the company has to pay. So you will the expenses that the company shall make or incur that has to pay in future, you shall create provision. Or for the services received during the month end. Here, as already we have discussed, the accounting period that is from April to March. Any services received within this period and the amount is not paid, or it only the service is received and the bill is also not generated, you tend to create an estimated amount for the liability which you have to pay. Here in current liability, one is short term borrowings, others are trade payables. Trade payables are for purchase of raw materials. You would pay to the creditors. Trade payables are also known as creditors. And you will have other current liabilities and short term provisions. Other current liabilities and short term borrowings. Short term provisions. So this is all about the liability. Now we shall see other basic terms that will be used in the business in the next video. If you like it, please share it to your friends who are in need. Thank you.